The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at Tuesday's market action coming out of the holiday weekend. The wheat markets did their best to hang on to some green on the screen with more weather concerns and falling production estimates in Russia, but even the wheat market kind of faded throughout the day Tuesday. Corn tried to stay fairly firm, down a few cents. A lot of pressure in soybeans and bean meal, though, with front month beans again rejecting that 1250 mark. Meantime, a strong day at feeder cattle that helped support live cattle trade. Energies were pretty good as well. Got plenty to try and unpack here as we get back to trading after the Memorial Day weekend. Joining us now for a conversation, Jim McCormick with agmarket.net. Jim, welcome back to Market Talk. Hope you are doing well, my friend.
Hey, I'm doing well, Jesse. It's great to be on with you. Yes, coming out of that holiday weekend, you got to say the markets do what they like to do. I mean, multiple times it seems like the last couple of years, you get a surge or either surge up or a surge higher, makes you feel good about the night market, and then by the day session, it fades that position. And here we go. We did it again here in 2024.
Yeah, we definitely did it again. I know the trade's going to be waiting to see what crop progress numbers are Tuesday afternoon. We're talking ahead of the release of those. Sounds like, though, the trade's expecting things to stay pretty much right with the 5-year averages. I know, too, we got end of the month coming up here at the end of the week. We'll move into summer. So there could be some added volatility here. Really, this story, though, this past month, Jim, has been this wheat market on these falling production estimates in Russia, and really the money flow there has been pretty good, and we tried on Tuesday, just couldn't hold that rally though, Jim.
Well, that's right. You nailed it. The big dog leader of the market in the grain market has been the wheat. The crop in Russia is getting smaller. The debate is how much smaller is it going to be? I think the USDA is around 88 million metric tons, where ICAR came out at 81 and a half. Silvecon's around 82, so below the USDA. Those numbers came out late last week, and that attributed to the surge of the U.S. market coming out of the holiday weekend. But it kind of fell back because, part of the problem we're seeing right now is, yes, that crop is getting smaller, but for the most part, we're not seeing demand come to our shores as a result of it. Now, we're going to sell wheat to who we sell our wheat to, Jesse, but we're not picking up additional sales to maybe countries that we traditionally don't sell to, at least yet at this point. So you get the surge, and then it just kind of falters back. Tends to be the mantra of the wheat lately.
Well, and you get that surge, probably some U.S. farmers selling on the surge because, to your point, I mean, we'll sell wheat to who we normally sell it to, but that even might be a little bit of a struggle as with wheat rallying. It's largely kind of pricing us out of the world market, isn't it, Jim?
You got it. So yes, I mean, and I think producers right now, if you get these surge prices, you get over your cost of production. It's probably not a bad idea to sell some of this wheat. I mean, the reality is wheat is one of those crops that we're harvesting 11 months out of the year. So there isn't a shortage. Now we need to keep an eye on it. If the Black Sea region continues to struggle, as of this recording, there's still not a lot of rain in the forecast. So that wheat crop could get smaller. And if it gets small enough, the wild card, Jesse, is going to be, what does Russia do? And the fact that Russia is anticipated to export around 44 million metric tons of wheat. If their crop gets small enough and their food prices start to spike, is Putin going to step in essence, and stop the exportation of wheat out of the country? And if that would happen, it would spike the world international prices of food. And that would definitely lead to even more potential demand for U.S. prices, or demand for U.S. product, I should say, but also higher prices. So it's something we definitely need to keep an eye on.
Well, I know wheat export inspections improved slightly on the wheat side out Tuesday, while corn and beans kind of range bound, and corn pretty much in line with what we've seen previous weeks. So demand definitely still remains a topic in these markets. Weather as well, kind of the big one for corn and beans in the U.S. right now. We'll see where planting is. In the case of this bean market, Jim, July lead month futures 1250's kind of been that sticking point. It just feels like we haven't found enough of a weather or demand related type of story to give us enough strength to hold above 1250 in lead month beans. And honestly, I wonder if old crop beans really have a reason to rally at all right now, Jim.
I think they're running out of strength, plain and simple, Jesse. They surged early on the coattails of the wheat, and they failed. The fact of the matter is, Brazil did have a smaller crop due to flooding, but they are going to have a crop. Argentina's crop obviously rebounded quite a bit. And here we are, we're getting our crop planted. I mean, for the planting progress tonight, the trade is pretty much looking for us to be right at the 5-year average. And I think we're doing pretty good. Talking to some clients like in southern Indiana, they're definitely struggling to get the crop in. But the reality is, down there, they got over a month to plant. They'll plant all the way into July. So, the bean story to me looks a little bit ugly. I mean, when you get to the new crop balance sheet, you're projecting the USDA's projecting that balance sheet of ending stocks at 445 million bushels. And that's scary enough. But then you dig into it a little bit, Jesse. To get to that 445 million bushel ending stock, they raised exports 125 million year on year. And that looks very, very unrealistic, at least currently, based on the fact that China has yet to buy one new crop bean from us. So you're looking at a carryout that unless China comes to the table, and it looks more and more likely that they won't, unless they're doing some reserve buying because of the political ramifications going on and the trade wars going on, our carryout can easily balloon to 500 million. And if we did have a wet weather, and there are no doubt areas across the Midwest that are struggling to get that final acre of corn in, I don't think they plant that corn. I think in general, they're probably going to say, hey, why not plant some $12 plus beans? And I think they will. So you got to essentially, you look at it, it's stacked up, a big projected carryout based on a demand that looks over optimistic, based on a supply without a weather problem that could grow. The balance sheet just does not argue $12 beans, and it's going to go a lot lower, unfortunately, if that story comes to fruition. Corn's the same way. We are getting the corn planted. We're right on the 5-year average. We're struggling a little bit to get it in, but in general, we're going to get it in. But the demand for corn has not been too great. Mexico's been buying a lot of corn due to their drought, but if it wasn't for Mexico buying, it'd be a disaster for our exports. Ethanol is doing okay, but the reality is without this aviation ethanol really getting up and going, there's only so much corn we can use for ethanol. So the demand's not there. Supply rallies are what we're seeing. Traditionally, supply rallies don't last, and once they end abruptly, and the market tends to go down twice as fast as it went up.
To your point there, new crop beans at 12, and some of this chatter that maybe some acres shift to beans from corn with some of the weather delay that we're having. I wonder about this. I mean, should producers be looking to hedge there at 12 because corn is king, and I got a feeling that as long as the N hasn't leached away off of farmers' fields, they're going to do everything they can to plant corn first before they shift any acres to soybeans here, Jim. So to me, feels like if I'm looking to protect some risk at $12 on the board for beans, for Novi beans, man, that seems like a good idea right now.
Yeah, it definitely is. And I agree with you. Corn is king here in the United States. Producers are going to try to plant corn. But like I want to stress, the balance sheet is bearish, even if we don't pick up additional bean acres. Just the projected carryout and overstated demand is a very bearish signal. Just if you would see some shift in acres potentially, it just adds to the bearishness. No, I would agree. This is one of those years, Jesse, I've been telling my clients, I think you might risk selling a little bit early than selling late and missing it. The reality is the last couple of years, we had prices so high due to production issues in South America, due to the war in the Ukraine. The reality is you could be bullish this time of year, miss it, still sell corn in the quote unquote fall low and still be profitable. This year's a situation, if you miss this spring summer rally that you could argue we're in the midst of right now, and if we would have anywhere close to trendline yields, your carryout is going to stay at 2+ billion bushels on corn. Your carryout could easily be over 500 million on beans. And that would argue beans not at 12, probably a lot lower, maybe as low as 10. And I would argue corn, which is trading around 485 for new crop, it's not going to trade at 485 to 5 with a 2 billion plus carryout, especially if you got beans at 10. You're probably going to see corn trade closer to a 3 handle, unfortunately. So if you don't get this crop sold here today and you miss it, the difference is, unlike last year, hey, I still made money, just not as much. The difference is this year you could actually be a negative cash flow. So the risks are high, plain and simple.
And I think on the corn side too, real quick, like especially new crop corn, there's been plenty of local basis pushes I've heard a lot about here in the last week plus that I think some farmers have taken advantage of or should be thinking about taking advantage of potentially, Jim.
You definitely saw some pushes going into the holiday weekend. I think some end users are caught a little bit short on the ethanol side. due to the lack of producer moving grain due to trying to get the crop planted. But you are getting those pushes. I would encourage people, at least let's talk old crop first. I would definitely get that done. I mean, the reality is this, Jesse, you're going to have about a little over 2 billion bushels of corn that no one's going to need at the end of this marketing year. You're already just a few days away into June. By the time you get in the latter part of June into the early part of July, most end users will have their needs covered through August into the new crop. You do not want to be that producer, I believe, who's got grain left over, because at that point, there's 2 billion bushels that are probably going to get hit really bad on a week basis, unless the wild card is always, unless we really have a major weather situation. And I would argue, sell the grain, use options if you want to play that. And it's the same thing for the new crop. The new crop situation, you're profitable now. Don't be afraid to lock some of them in. Some of the profits in, I should say.
Jim McCormick with agmarket.net, our guest here today on Market Talk. Jim, a few other things here before we wrap it up today on the cattle side. Really strong day in feeders on Tuesday. That helped out live cattle, I think, as well. Finding some green on the screen. Mostly neutral to friendly. Cattle on feed report from Friday. Boxed beef continues to soar. A lot of things kind of lining up here for this cattle market, feeders in particular, it looks like.
Well, exactly. I mean, right now, I think the feeders are catching a little bit of a good win. Like I said, cattle feed was neutral for the most part. Grain prices are going down. Grass is greening up across the Midwest. I mean, a lot of the areas that were dry are now getting grass is turning green. So I think you're there. As for the fat cattle, we rebounded very close to where we were before the bird flu came into the front of the storyline. Now we'll see how much the consumer can take. The reality is there's a lot of headlines about how beat up the consumer is, which kind of scares you to the bearish side. But on the other hand, what the consumers are telling people in their surveys and what they're doing is just opposite. And what I mean by that is anybody who flew over the weekend knows their airlines were full. More people traveled this Memorial Day weekend, I think, on record. I mean, if you look at it, the consumer is still spending money. There's a fear about the high credit card debt and everything else, but right now, it does not seem to be hindering that spending. If that spending's there, that should be very optimistic for the cattle market, hopefully in the demand for beef. But I would encourage cattle people, just like the grain people, when you have a chance to lay off risk, I would lay off the risk. We saw the bird flu headlines, what it can do, and that could come back to fruition again. And it's like same argument. You want to make sure you're profitable, because if it really gets ugly, it could get really ugly fast.
Well, thinking about demand in beef, it sounds like there's some chatter in the trade, worries about demand on the pork side as well, which is a little curious to me that that's out there as kind of a chatter of the trade, just with the fact that pork is so much cheaper than beef at the retail counter right now. So that on the hog side, that's a bit interesting as well. But I think this entire protein sector, to your point, it's going to be about that retail demand here through the summer months, Jim.
No doubt about it. I mean, like you said, I think the demand for the pork hopefully will come back in. I mean, we saw a lot of traders when the cattle market tanked, they bought the pork. And then when the cattle market rebounded, they sold the pork. And that's partly when you look at the spreads of those two, they've obviously gone opposite directions. The pork is now getting down there where I think you're going to start getting some consumer demand. Because the reality is this, the stock market's trading, it traded just shy of 40,000 plus just last week. Now, the stock market's not the economy, but it is one gauge of the economy. So you are seeing a sector of the United States that is doing very, very well, and they are going out to eat. But the reality is there is a portion of the country, unfortunately, that is struggling immensely due to the 20% inflation we've seen in the last 4 years combined. So they are getting pushed to the lower end proteins, and that tends to be the pork and the chicken. So that should hopefully, as in the big picture, have those people transition down to the cheaper protein, that should hopefully find support for the pork industry.
Well, let's get some final thoughts from you here, Jim. Good stuff as always. Really looking across the entire spectrum, grains, livestock, outside markets, the economy, et cetera, thinking risk management and more. I mean, what do you want folks to really remember here as we near the end of the month of May and get ready to get into summer?
Well, I think what you got to look at is where we're at now. I think, look at the weather. We got rain in the forecast. I think we're in a position, Jesse, where we're switching where rain is bullish, can't get the crop planted, to rain is bearish. We're getting this crop in the ground. Remember, when I had a client always tell me, when I get rain, even heavy rains, most of my ground's on a hill. As long as the hills are getting rain, I'm going to lose a little bit in the valley, but net, I'm going to produce a crop. When you look at the risk that we're going into, we've got a lot of volatility in the world markets. We got a very contentious presidential election that's going to go down to the wire. We've got a lot of trade issues building one of the biggest consumers of commodities, China, in the world. Now is the time. We've had a nice rebound in the beef market from the scare of the bird flu scare. We've had a nice spring rally in the grains. For a lot of clients, a lot of farmers, you're back to above break even. Now is the time to reevaluate your costs and your profitability and start laying off that risk.
Well, I know as well, Jim, if folks have questions, they could reach out to you and the rest of the team there at agmarket.net, your website. You guys have a great app, a lot of stuff available for folks to take advantage of. Good old-fashioned phone call. A lot of ways to get in touch, isn't there, Jim?
You got it. Go to the best way to go, agmarket.net. Sign up for a free trial. Also, like Jesse mentioned, we have our new app. It has been updated. It is up and running. Go to the website, find out more information about that as well.
Agmarket.net for more. Jim McCormick, always good to talk with you, sir. Thank you for joining us on Market Talk. Have a great week. We'll talk to you again soon.
Thanks again for having me on, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.